We've got some real financial horror stories out of China, although admittedly they pale in comparison to the human rights horror stories. You got cases of blatant fraud like a Luckin Coffee, that people braided me from that one for spotting that. And that came public in 2019. The stock tripled from its IPO price before we found out that Luckin was faking a big chunk of its sales, and the shares imploded. Within 13 months of coming public, the stock got delisted from the Nasdaq. You've got shady companies with disclosure issues like Phoenix Tree Holdings. That's a Chinese real estate company that raised over $100 million in January of last year. The stock steadily worked its way lower, and a few months ago, it got delisted from the New York Stock Exchange for failing to, quote, make timely, adequate, and accurate disclosures of information to its shareholders and the investing public, end quote. Or how about RLX Technology? Now, this is a vaping play that's been the largest Chinese IPO of 2021, the largest. So what happened here? RLX surged from $12 to $35 in its first couple days of trading. But since then, the stock has plunged to the single digits as the Communist Party has started cracking down on vaping. Boy, they were smart to get that deal done, huh? Now, the company's being sued by investors for allegedly overstating its financials and misrepresenting the risks when it came public. However, that doesn't mean you should give up on every single Chinese IPO. While a lot of them are indeed low quality, there's a big caveat. The larger ones, they tend to be much, much better than the smaller ones. Doesn't make them a sure thing, but it means they're sometimes worth buying on a case-by-case basis, which brings me to the one I want you in on. Didi, D-I-D-I. That's the Chinese version of Uber that's coming public on Wednesday. This company has a stranglehold on China. It's the ride-sharing market. They own it. They crushed their competitors and then bought them up when they got tired of losing money. That includes Uber China. Didi's also got some really huge backers. Chinese tech giants like Alibaba and Tencent, a Japanese conglomerate like SoftBank, even Apple is in Didi. Finally, based on the proposed price range, which values Didi at around $65 billion, I think the valuation seems eminently reasonable. Now, there are some antitrust concerns here, but as long as they stay on the Communist Party's good side, and I know it's probably hard to do, but as long as they do, I doubt they'll have much trouble with the regulators. So if you want to speculate on a Chinese IPO, you've got my blessing to bet on Didi. I would try to get as many shares as you can. D-I-D-I.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.